.au today. This is Money Exchange with Andrew Barnett.
Hello, I'm Andrew Barnett and welcome to Money Exchange, the only TV program dedicated to keeping you up to date on everything you need to know about currency markets. It's been another strong week for the US dollar and another terrible week for the euro, losing more ground to the greenback. The Aussie dollar, whilst not falling out of bed, still remains under selling pressure, but it was the Kiwi dollar, the most overvalued currency on the markets in my view, that has fallen out of favour with traders, falling some 2 cents on the back of weaker than expected unemployment data and poor dairy auction prices. I think the Kiwi dollar has a lot further to fall, along with the euro. Joining me here in the studio is a gentleman who's taken looking after his own money to a new level. This year he's currently up over 35% for the year, investing some of his savings in the currency markets. What's his strategy? What's he trading? And how much does he risk? We'll talk to him shortly. We'll also cross to London on tonight's show to chat with a man who accurately predicted a few weeks ago on this program the turning point for the euro. He's been responsible for looking after a few billion or so over the last decade, and I'm eager to ask him if we should stay short on the euro for the foreseeable future. Plus tonight we'll recap what the major central bankers have been saying this past week about interest rates and monetary policy. Is there any reason to adjust our expectations of where interest rates are headed and what direction currencies are likely going? But before we do any of that, let's first take a look at this week's headlines. You can also email me on the show via andrew@moneyexchangetv.com. But let's take a look at the headlines first. The Reserve Bank kept the official cash rate on hold at a record low of 2% at its November meeting on Tuesday. In handing down the decision, RBA and Governor Glenn Stevens says the prospects for an improvement in economic conditions had firmed a little over recent months. With the sixth consecutive month, the rate was left unchanged. In its quarterly statement on monetary policy released today, the central bank slashed its inflation forecasts, giving it scope to ease further if appropriate. It also trimmed its GDP forecast for the current calendar year slightly to 2.25%, but kept its 2016 estimates unchanged. The central bank says inflationary pressures are more subdued than previously anticipated, leading it to lower its near-term forecasts, but the lower exchange rate is expected to place gradual upward pressure on prices. And overseas, all eyes are on the October non-farm payrolls report released later tonight. The report will be closely watched for clues about the timing of a potential rate hike by the US Federal Reserve. It follows Fed Chair Janet Yellen telling a congressional panel the US economy is performing well and the December hike remains a live possibility. Economists are expecting non-farm payrolls to rise 180,000 last month, with some tipping the unemployment rate to fall to 5% from 5.1% in September. Well, with such low interest rates on offer from banks, it's little wonder investors and self-funded retirees are looking at alternative ways of boosting their returns on investment. Joining me here in the studio is a man who's successfully learned how to invest his own money in the currency markets, and so far he's been beating the banks and the so-called experts at their own game. Mal, welcome to Money Exchange.
Thank you, Andrew. It's a pleasure.
Well, seeing you here and we're talking about better returns and high returns on investment, we better get straight to the chase.
Right.
Tell us a little bit about your strategy, some of the favourite trades you have in the market at the moment. Are you a technical trader, fundamental trader, and what are some of the trades that you like right now?
Thanks, Andrew. Well, my prime approach is a fundamental approach. I like to look at which currencies in the world are demonstrating a strength and those that are demonstrating a weakness, and trade one against the other. Avoid trading strength against strength or weakness against weakness. And so, of course, some very obvious ones right now. The euro is on a downward slide with the continued quantitative easing that Draghi's probably doing. He's indicated that he will. And, of course, the Fed's indicated already, and they probably will perhaps raise the bar in the US. So
Euro USD is
Euro
one of your
USD
favourite
is a
trades at the moment.
very clear trade for me, where you feel fairly confident that the fundamental direction will just drive things. But I still like to use the technicals to enter. So that you get the best deal.
And when you're looking at your technicals for your enter, obviously fundamentals because of those interest rate differential, stimulus, etc. When you're looking at your technicals, are you entering off a shorter term chart? Are you looking at daily charts, 4-hour charts? What's deciding that Mal Smith is going to pull the trigger and enter a position?
It's usually a daily chart, Andrew, and I'm looking for breakout trades. So depending on how strong the fundamentals are, it'll urge me to either take a fairly conservative approach to that or a more aggressive one and jump in a bit earlier.
Do you have a particular price target on the Euro USD that you like at the moment on the way down?
Look, I've set one on my chart, but I'm blowed if I can think of it right now.
No, that's okay.
I've done that with the fundamentals.
So what drove you to choose the currency markets to ply your trade and learn how to invest your own money? Why the currency market instead of, say, stocks or commodities, oil, gold? Why currencies?
Well, it's a bit of happenstance, and it's a bit of it's finding a comfort zone that suits the personality, I suppose. I did dabble in indices. I found that really demanding and very stressful, so that wasn't me. I didn't want to be up half the night and watching my screen and losing sleep and going quite mad. So I did find that I've found now that the currency exchange operating on a daily chart is a much more gentle approach for physically and demanding, and it's got predetermined times when it's best to be checking through the charts.
So being specific, we're looking for a fundamental directional view of strength versus weakness, and then we're looking for some genuine momentum on the downward side on the daily chart. Entering the position, what about risk? What are you on your trading account size, what are you risking in terms of percentage risk on, say, the trade you're in now on the Euro USD?
I'm trying to be extremely consistent about that, given that I've learnt the hard way that managing risk is the really most vital element in trading.
Yep.
And so my risk on each trade maxes out at 2%.
About 2%?
Yeah, which is higher than I originally played earlier in the year.
Yep.
I was on 1%, but I ramped that up. I'm doing that as a strategy to see how that goes in anticipation of what I'm going to do in the future.
And in terms of the currency positions that you have, I mean, you've done really well this year. In fact, you're well over 30% return for the year so far. And I think the trades that you're in, there's a good chance that they're going to, improve that return even further. How many currency positions do you generally hold, Mal, at any given time?
Well, it ranges from between, say, 4 or 5 up to sometimes as many as 8.
Sometimes 8.
Which is pretty high. I don't like to be in too many, but if the fundamentals are so strong, and that is a little bit of a weakness I have.
It is a very correlated market, isn't it?
It's very correlated, so I'm probably overcooking things a little in some areas, but
yeah,
that's the
it's
current
interesting.
situation.
Stan Druckenmiller, one of the greatest hedge fund traders and currency traders of all time, said once, he said, I like to have all my eggs in one basket and really keep an eye on the basket. And by the sounds of it, that's what you're doing. Mel, what's one of the biggest lessons that you can provide the viewers on the program tonight that are trading currencies, that are aspiring to get to the level where you are with your consistency of what you're doing? What's one of the lessons that you can give them that you've learned in the last few years?
I guess I want to nail 2, if I may. I'll take the liberty. First of all, you really need to be involved with a strong educational group, a strong foreign exchange educational group.
Yep.
I'm working with LTG Gold Rock, and they've got an excellent educational program. You need that to get started, to get sorted out and establish the patterns that are going to suit you. And then secondly, and thirdly, and fourthly, and fifthly, managing risk.
Yep.
It's a bit like in real estate, it's location, location, location. In trading, it's managing risk. Managing risk And for goodness sake, manage risk.
Fantastic. Well, I'm going to ask if you wouldn't mind sticking around with us here on the show tonight, because we're going to talk about what the central bankers have been talking about this week and whether we should change our directional view on where we think those currencies are going. And with a bit of luck, we might be crossing to London as well to speak with Thanos Papasavas from EMFC. We'll be back right after the break.